Thank you so much, Adetunji, for being here with us.
You're welcome.
We're looking at another lackluster session, and the OSHA index still trading flat, but we're looking at banks pushing volumes. GT Bank, Sterling, ETI, all top on the volume chart. Give us a sense of what to expect in terms of what sentiment to be today, especially as we still see some latecomers talking about the earnings, 2013 earnings still coming in. Axis Bank, we just had one from Skybank coming in.
Okay, we expect more of a neutral mood in the market today. Despite the fundamental releases we're seeing in the banking sector, it has not been sufficient enough to bring a sharp rally on the upside in the OSHA index, which in actual fact has been traded within a range bound. The OSHA index has been now moving between a 38,000 basis point to a 39,000 basis point, and expectedly this also is the same ranging period. Ranging zone we experienced from the month of February down to the month of April, down to the month of March, and expectedly we are expecting this at the moment until there's enough confidence in the market that we could not see a sharp rally.
Well, what could spur that confidence? I mean, obviously the market appears to be in dire need of a good catalyst. We've seen the earnings season 2013 that has fizzled out, and we're of course now looking forward to the first quarter Q1 earnings that should perhaps begin to trickle in at the end of this month. But until then, that gap, what's the market to look forward to?
Generally, if we should go way back from January 2014 up to the month of March, we've seen a bit of correction in the market. For 3 consecutive months, we have seen a bearish mood in the market. The market has been south for 3 consecutive months. And from the technical analyst point of view, what we are seeing is just a correction. And this correction is expected because the December rally, the October to December 2013 rally, had a weak momentum. And the correction we're seeing is just a range bound. What we're seeing is a bit of until we see that form of push, may not be from the fundamental aspect, probably from the cash flow, inflow of cash, probably FDIs and co. But we see that now the market participants need something to trigger it, and presently it is in a consolidation mode.
Okay, well, while that is going on, let's talk about what sectors you think, or perhaps individual stocks you think hold value for investors at the moment from whatever sector, and perhaps from a technical point of view.
Now, the consumer goods holds value. The banking stocks, no doubt. We've been seeing a good releases from the banking sector, but there are some banking stocks that have been relatively weak and some that are relatively strong, and which some relatively stronger sectors, which we can see from GT Bank, Zenith, Access Bank definitely released their earnings yesterday, and it's expected that Access Bank should also be on a buy mode at the moment. We see more of rally in Wema Bank, but also at that we expect the banking stocks to push the market at the moment. That is what we need at the moment, and that's would be what will push the market and probably bring in enough confidence in market participants.
Hopefully we'll see that confidence coming in, because I'll tell you now the market is in dire need of something.
Yes.
Well, thank you so much, Adeshina Adetunji, for talking to us.